Well, welcome everybody. Kia ora, koutou, no mai, haere mai. Could you please put yourselves on mute if you haven't already? The topic of today's webinar is to understand your farm business with a focus on dairy. The aim is to better understand your farm focus reports and how they can help your business. The webinar will run for about 45 minutes with plenty of time at the end for questions. It will be recorded for future reference, and we have got questions at the end. So please, if you've got any questions, enter them into the chat box. Sorry, I should have introduced myself. I'm Jane McLennan. I'm a dairy farmer in Greytown, and I've been working at Farm Focus for a couple of years now. And I'm privileged enough to have Nicola with me today. Nicole, and she is one of our superstars in our customer success team, and she's going to be monitoring the chat box and facilitating the Q&A session. So I hope you all know by now that Farm Focus is not just about compliance and GST reports. Compliance, however, is the gateway to many insightful reports and information in Farm Focus so that you can better understand your farming business. What I find really gutting is a number of farmers who are spending a lot of time and energy coding consistently and correctly, but they're not accessing their reports, and therefore they're not making the most out of Farm Focus. And we want to change that. Your reports provide value because they turn that raw data that you've entered as you've coded your reports into something more meaningful by doing some calculations behind the scenes. Remember, with all our reports, you can't break them. You're not adding any new information, you're just manipulating the view for those reports. Now, before we start, it's important, but to get the most out of your reports, that you have some basic information correct in Farm Focus. And that really falls into three parts. First of all, you need to ensure that your high-level code structure is correct. Then you need to ensure that you're doing consistent coding. And finally, that you've added some basic physical data about your farm into Focus. So let's have a look at that in more detail. What I want to do now is to move into the demonstration database. And then I'm going to, I'm going to move into the demonstration database. And here we are here. So the first thing we need to do is ensure that our code structure is correct. We look at that here under settings, codes, farm codes. We can look at our codes at a section level, a category level, or an extended code level. Now, while we can customize our categories and our extended codes, what we want is our sections to look to something like this. So why is this important? Well, our income minus our purchases equals our net income. And other words for net income you might see are gross farm revenue or total farm income. Then you have your net income and you minus your farm expenditure and you're left with your farm surplus. Now, your farm surplus is an important metric. Your farm surplus is how much the farm makes without being distorted by the ownership structure or capital items. Your farm surplus is sometimes called your trading surplus or your EBITDA, your earnings before interest, tax, and rent. Once we've got our farm surplus, we take away our interest and rent, and that creates our operating surplus. Now, our operating surplus is basically your taxable profit. It's what accountants use as a guide to calculating your tax. Once you've got your operating surplus, you take off your others, and you're left with your financial year surplus. Now, your others are your non-operating expenses, and they include things like your capital expenditure, drawings, and principal repayments. Now, if you're new to Farm Focus, then your section should look like this. But if you've been with us for a long time, you may need to review your farm code structure, and so your reports are more meaningful. Now, I haven't got time to show you how to review your code list this afternoon, but we've got a great Help Centre resource on that. Go into the Help Centre here and search under farm codes, and there'll be a great resource that will walk you through how to do that. So while I'm in my farm codes, I just want to have a quick look at our stock codes. Go into your stock codes and scroll down to the bottom and make sure for all your stock codes you've got a % yield, because it's the % yield that Farm Focus uses to convert all your stock events to, say, carcass weight, whether or not you've entered them into Farm Focus's carcass weight or live weight. Now, once again, if you're new to Farm Focus, you definitely should have a yield % for all your stock codes. But if you've created new stock codes or you've been with Farm Focus for a while, please come in and check your stock codes to make sure that there is a yield percentage. The next part you need to do to ensure great reports is ensure that you're consistently coding your information. Now, we've got a whole lot of tools like our coding rules, bulk coding, merging, to make coding consistent. Please use them. Also, when you code your livestock invoices, adopt the philosophy, take a sec to check. There is a lot of valuable information in our livestock invoices that need to be captured to get the most out of some of our reports. Also, too, add a meaningful description, so when you come back in 3 years' time, you know exactly what that expense was for. And finally, check that your physical data has been entered into Farm Focus. Now, what we find is that some of our farmers aren't entering things like their hectares into Farm Focus. So to do that, go into Setting, Farm Business, and down here, enter your effective farm area for your farm. That's if you want Farm Focus to be able to calculate your kilograms of milk solid per hectare or your farm expenses per hectare. Also, under Settings, Production, please add your annual kilograms of milk solids each year, because this is where we pull from to calculate your break-even milk price. So add that in there. And while we're also under Production, please enter your livestock values. As a dairy farmer, you don't need to enter livestock weights, but you should be entering your livestock values here for all your stock classes. Now, your opening and closing are generally the same as stock age up. But this data is used in some of our reports to show any adjustments to revenue due to your closing numbers being different to your opening numbers. Now, remember, revenue includes not only money in the bank, but money in the paddock too. So that's your stock. So if there's a significant change in your stock numbers throughout the year, it can impact on your revenue. So that's the basic setup. Let's go into the main body or the focus of today and start looking at our reports. Now, we find all our reports here under the navigation bar under Reports, and I want to start with the Cash Flow Detail Report. Now, your Cash Flow Detail Report shows you all the details and assumption behind your cash flow. Now, like the majority of our reports, when you open a report and you select it, a modal like this will appear. This is where you set the parameters of what you want to view. You need to first set your data source. You've got 3 options. You can select Actuals and Plan, and here you'll get your actuals to a certain date and then your plan for the rest of the financial year. What you need to do, though, is select the month you want your actuals to stop and your plan to start, and that's your revision month. Next, you can select actuals, and they're obviously your actuals for a particular year. And then you could also select a plan if you like. So that could be a scenario plan, a what-if plan, or a baseline plan. Now, in some of our reports, you can view them by a specific date range, whereas in others, you've got to view them by a full financial year. In some of our reports too, you get the option to review the report by payment date or accrual view. If you select a payment date, it will show you the report when the money hits your bank account, whereas with accrual view, you'll view the report based on invoice or event date. So let's have a look at our cash flow detail report from our actuals for last financial year. Now, with all our reports, generally we've got these chevrons here, so you can collapse the report to that high section level, or look at a report at a category level, extended code level, and because this is the cash flow detail report, we've got another chevron here which will show your report at a coded line level. So I'm going to collapse this report right up to that section level, and now you can see why that overall structure of your sections is so important. Straight away in this report, I can come through from a cash perspective and see that my net farm income is $1,158,000. So you can just walk your way down here at a high level and review your report. Now, with all our reports, we have these icons up here. The first one here is our settings icon. So this is where I can change the parameters of what I'm wanting to view. We can also filter our report. So I could filter the report by my codes, by bank accounts or tags. So for example, I might want to come in and just look at the income. So I would select income and I would apply. And now you're only seeing income in this report. And I could draw down here if I wanted to and just look at last season's deferred payments. And here are when I received those payments and my total deferred payments for last financial year. Now up here, this is where we can, if we've filtered our report, where we can close that filter so we get just that full report back again. Now we've got this other icon here, which sets our print size. So if we're ever to print a report, we can select the printing to be either small, medium or large. And once you select one of these, it will persist to your other reports. And then here we've got our print icon. So you can print or download this report as a PDF. And the level of the detail that you've got viewing here is what you will see when you print or download that report. Now we've also got this view icon. And you use this view icon to identify what columns you want on or want to view in each of these reports. So just turn the columns on or off as you need. Now, as a dairy farmer, I tend not to be interested in the stock columns, so I turn them off. And you can also show your reports as GST exclusive or GST inclusive if you require. Now, how do I use this report? Well, I tend to use my cash flow detail report for problem solving or investigating issues. For example, just recently, my husband asked me how many bales of baleage did we purchase last financial year? And to answer any question like that, I come straight to my cash flow detail report. I would come in here and I would filter by my farm expenses. In fact, I would be looking only at my feed purchased, and then I would press apply, and then I would come here into my baleage, and I could quickly see that we purchased 685 bales last financial year, and it cost us 82k. So this is where in the cash flow detail report, you're rewarded with entering that quality information by adding that detailed description, notes and quantities. If I hadn't bothered to enter the quantities as I was coding my invoice, I wouldn't be able to now answer the question of how many bales I purchased and what I paid per bale. This report is also useful if you've got any queries in your other reports. So for example, if you're in your variance report and you find that you spent a lot more money this year than last year on car freeing, and you want to understand where you spent that information, you would come in here and filter once again. This time I'd be filtering for my car freeing expenses, and I would be able to analyse all my expenses at a code level. So that's probably a good way or a good segue into the next report that I want to show you, and that is the variance report. Now, this is one of my favourite reports, so I'm going to go into my variance report now. Now, this is a go-to report of mine, and it allows you to compare two sets of data. You set up the modal by selecting the two sets of data, column A and column B, that you want to compare. So how do I use this report? Well, at the end of the financial year, I would always use this report to compare my this year's actuals to my previous year's actuals. Because the question I'm answering here is, how well did I do this year compared to last year? So to set up my report for that, I would need to put in my actuals for this year in column A and my actuals for the previous year in column B, and then I would apply. So in column A here, I've got my actuals from this year. Column B, my actuals from last year. I've got my variance between, or my difference between column A and column B here. And then I've got that variance or that difference as a percentage in this column here. Now, as you can see, we've got the dollar value and the quantity. Now, I personally find having the quantity on really noisy, so I tend to turn it off when I do my analysis of this report. To do that, I go into my view icon here and I turn off my quantities and I apply. And now I find my report a lot easier to review. Now, once again, when I'm reviewing my variance report, I tend to collapse my variance report up to a high level. And so I can see things at this basic high level first, and then I tend to drill down into the detail. So for interest, straight away, I can see my operating surplus this year were about 255K, which was actually considerably lower than the year before, which was 325K. In fact, it was nearly 70K less than last year, or 21% less. So this is telling me that my operating surplus is 21% less in my 23-24 year compared to my 22-23 year. Now, you can look at your percent difference or your absolute difference. It's up to you. But I personally prefer to look at my absolute difference because I find that percent difference may be misleading at times. You could have a significant percent difference, but your absolute difference is quite small. So once I've reviewed this report at this high level, I then tend to look at it in more detail, and I come down and I look at my expenses, for example, and I run my eye down my variance. And this quickly tells me here that for my animal health, I spent nearly 6K more this year than last year. What's interesting though, when I go down to my breeding expenses, I actually spent 14K less this year than last year. And I think to myself, well, why is it different? So I come along here and I can use my drop down arrows to drop down, and I can easily see now that difference is through herd testing. So obviously I didn't do as much herd testing this year as last year to save money. So that's how you can use your variance report. But when else do you use your variance report? Because I use this report a lot. Well, once again, at the end of the financial year, I would always use a variance report to compare my this year's actuals to my original baseline plan. The question I'm answering there is, how well did I do compared to what I thought I was going to do? To set that up, I'd put my actuals from this year in column A, and in column B, I'd put my plan. I'd put my plan for this year and my baseline plan, and I would apply that. I also use a variance report at the beginning of the financial year. When I've developed my initial budget, I like to compare my baseline budget that I've compared to my budget of my actuals from last year, or a status quo year. So I would put in column A here, I'd put in my working plan that I've just developed, and in column B, I'd put my actuals from last year or a status quo year, and I'd compare the difference to ensure my budget is realistic. I also use my variance report throughout the year, and I compare my actuals to date to my original plan to see how I'm tracking. And finally, the variance report can be very useful if you've created a scenario, a plan, a what if. So, for example, you might be toying with the idea of having a share milker on your farm, and you've developed a budget for having a share milker rather than a contract milker, say. And you could compare the plan for having a share milker against a status quo budget you've got to see what the bottom line looks like having a share milker versus your current status quo. So that's the variance report. The next report I want to show you is the year-to-date variance report. So I'm going to go into here, year-to-date variance report. Now, this report is especially important if you're managing your operation carefully and you've got a credible budget. In that case, it could easily be one of your default reports. You use this report to compare your actuals to your plan for your latest month's worth of data. So to set it up, I would put in this year, and I'd put in my actuals for this year, and I'd be comparing it to my plan for this year, and I'm going to use my working plan. I would then need to select the month you want to you want that you have your last lot of complete set of data for, and I know this is the demonstration database, so I know that I've got a complete set of data up until the end of July, so I'm going to select July there. And then I'm going to press apply. Now, what you've got here on the left-hand side is you've got your information about July, and then on the right-hand side, you've got your year-to-date information. So here we have in column A here, this is what we have actually spent to date in July. This is what we plan to spend in July. And here is our variance as an absolute number and our variance as a percent. Likewise, in our year to date, this is what I've actually spent year to date. This is what I plan to spend year to date. This is my variance as an absolute number, or the difference between the columns, and this is my percent difference. So how do I use this report? Well, as far as expenses are concerned, what I tend to do is I run my eye down my variance to see for the month of July, to see how my actual expenditure compares to my planned expenditure. And if I find any significant overs or unders, I then come across to my year to date to see if there's a trend emerging. Or maybe my over or under expenditure in July was purely a timing issue. Now, at the beginning of each financial year, it's harder to see that trend data because you've only got a few data points. But as the year progresses, this year-to-date information can be really useful, because it's obviously okay to have 1 month where you've got a major over or under. But if your year to date is significantly over or under in the same direction, then you've potentially got a concern and you might want to further investigate what's going on. So, for example, here in the month of July, I look at my variance and I've actually got a really credible budget. My actual expenditure is very similar to my budgeted expenditure. Now, my year to date, I've only got a few data points, so it's not really that helpful. But what is of interest here is that I've already spent 11% year to date on my animal health budget. And so moving forward, I would probably want to keep an eye on my animal health expenditure to make sure that this trend doesn't continue. Now, we also have an additional tool in our year-to-date variance report. You can find that under here when you go into your settings. You can put in this column here, which is your year-to-date remaining column. Now, if I apply this, what I have now is an additional column at the end of my report. And what this is telling me is what you've got left in your budget to spend to the end of the financial year. So, for example, going back down to my animal health here, this is telling me for animal health, I've got 43K still left to spend for the 24-25 financial year. Now, if this number had been a positive, it would have meant I'd have already spent my budget for animal health for this financial year. So the next report I want to show you is our trend report. Now, your trend report looks at the macro trends. It looks at 5 consecutive years of data, and it allows you to compare your business against itself year on year. Or in other words, you're looking at your business over time. Now, I use my trend report at the beginning and at the end of the financial year. At the end of the year, I like to compare my this year's actuals against 4 prior years of actuals to see if there's any disruption in trend. And if I find a disruption in trend, I would investigate it. And I would investigate it using my cash flow detail report, which we've already talked about. I also use the trends report at the beginning of the financial year to validate my new budget or working plan that I've developed. I like to compare my new working plan to my last 4 years of actuals to make sure my budget for this year makes sense. And finally, another good use of the trends report is to use it for that scenario planning. So say you created this budget for employing a share milker next year, you could put your share milkers plan in here and then have 4 years of prior consecutive years of actual data to see how much this employing a share milker impacts on your bottom line. So once again, we've got this modal here and that we've got to decide what we want to view. The first thing we've got to select is our start year. And this is the year you want to start counting your 5 years back from. Now I'm going to, I tend to always like to look at full financial year. So I'm going to start with the 23-24 financial year, and then I'm going to apply. Now, this is demo database. We don't have 5 years worth of data in this database, but with your databases, you probably will have. So you'll be able to see 5 years worth of trend data. And in fact, you can actually look at any 5 consecutive years. If you want to go back and look at 95 to year 2000, then set the report up for those years. It can be really interesting to have a look. Now, to be honest, I actually find the trends report a really interesting and fun report to have a look at. So, and also too, it's quite a simple report to set up. So if you're sort of starting out looking at your reports, come and have a look at your trends report first and start analysing that. You'll be interested or surprised at what you find. Come and have a look at your changes in interest over the last 5 years, or the changes in your rates for the last 5 years, or insurance. It's really, really interesting. So the next report I want to show you is our livestock reports. Now in Farm Focus, we actually have three lots of reports around livestock. We've got our livestock summary report, and this is basically your livestock grid from your working plan. Now, I'm not going to cover this today because we do have other webinars on the livestock grid, but we do have our livestock reconciliation report, and this report tracks the movement of your stock throughout the year. So once again, you need to set up the report. I'm going to just show you my actuals from last financial year. Now, what's interesting too is you've got this, this is new. You can view the report as stock owned or stock on farm. So this is for being developed mainly for people whose primary income is grazing, and so they might want to view their report on stock on hand rather than stock owned. But I'm assuming that the majority of you own your stock, so you've selected stock owned, and then you apply. And now you can see here in this report, you've got your stock classes down the left-hand side. We've then got a whole lot of columns here, our opening numbers, our births, our purchases, our sales, etc., etc. We have also our transfer in and transfer out of stock. That is mainly used by the red meat sector. You've got your year-end numbers. This is a dairy demonstration database, but you would also have your aged up stock numbers here. Now, the final livestock report we have is our livestock trading report. Now, your livestock trading report is a report that's really for the red meat sector, because what it shows is the kilograms of carcass weight your farm produces. Now, if you've got a beef finishing farm or a beef block, this might be of interest to you. I don't have time to cover it this afternoon, but if you want to learn about your livestock trading report, please come into our help centre here and search under livestock trading, and a really valuable help centre resources there, as well as a video that will walk you through the livestock trading report. Now, the next report I'm going to show you is our economic farm surplus report, but I'm going to move into an older database to show you that, because at the moment my EFS in my demo database is glitching. So your EFS report shows both the physical and financial performance of your farm and lines up with industry benchmarking data. It allows you to compare your performance against yourself and industry standards. It's created by mapping the different KPI reporting groups in your farming business, and it's a GST exclusive report. It's always based on a full year of data and accrual view. So to set up the report, once again, I'm going to look at actuals. Now, looking at this, it's quite a few years ago. I'm going to be looking at now in this database. And because we're dairy, we're going to select display mode, milk production, and then we apply. Now, before we view this report, it's important to note that these are the columns that always come up when you first go into this report. What you need to do is turn off the columns associated with the red meat sector and turn on the columns, or make sure the columns associated with dairy are on. So to do this, I'm going to turn off my stock, my dollar value per stock unit and my kilograms of carcass weight. Now, while we're in this view modal, what's interesting to note, you can also choose, if you want to hide either your operating surplus section or your non-operating expense section. Now, this can actually be really handy if you want to share this report with other people, say your share milker, and you don't want them to see some of your personal information, like the amount of interest you pay or the amount of drawings you take out or the tax you pay. So you can present this report with this area hidden. Now, I'm going to keep it on for the purposes of this demonstration. Now, at the top of this report, we have our production data, starting with our milking animals. Now, these milking animals have been pulled through from your livestock grid. They are your opening animals for your mixed age cows and your rising 2-year-olds. Now, if you want to change that number here to your peak milking cows, you can do that. In this report, we've got a new icon up here, and it's called our adjustment icon. You can go into that, milking and breeding animals, and enter your peak milking numbers here if you wish. Now, your total kilograms of milk solids has been pulled through from your dairy forecaster. And then we've got some standard metrics here. We've got our kilograms of milk solids divided by our animals, our milk solids divided by our hectares. And then down here, we move into the main base of our report. What we've got at the top is our revenue, or we've got our KPI reporting groups down the left-hand side, and we've got our revenue at the top. And here is our total revenue for this farm for this financial year, which is the 21-22 year. Now remember, your total revenue equals your milk check plus your livestock sales plus your other income minus your purchases with an adjustment for your change in stock quantities. So if you go into your livestock area here, you'll notice that there is an adjustment. And this adjustment is for changes in your opening and closing numbers, because we need to consider, as we said earlier, not only the dollars in the bank, but your dollars in your paddock. And if you've had a significant change in your opening numbers compared to your closing numbers, it will impact on your revenue. So this is where we make that adjustment for that. So once we've got our total revenue, what I tend to do is like to look at my total revenue on a per hectare basis, on a per milking animal numbers basis. I also like to look at here, my GFR is my gross farm revenue. So this is telling me that my milk is 88% of my gross farm revenue. Now, on our personal farm, it's at about 93%. This particular database has got quite a lot of income through other farm income. Now, a lot of people too like to make a metric or a goal for the season on what they want their total revenue to be on a per hectare basis or on a per milking basis. Now, these figures are quite a lot, but remember it's the 21-22 year, so it was a good payout year. Now, when we go down here to our farm expenses, you'll see here, this is the total farm expenses for the financial year. And again, this is fairly low. This is before our major inflation adjustments. But again, this is a really interesting to look at. You can look at your farm expenditure on a per hectare basis as your total farm expenses as a percent of your total revenue, or on a per milking basis. Now, what you can do is you can compare these numbers year on year by looking at this report for the different financial years, or you can compare these data here compared to other similar farms. So, for example, here, this is telling me that on this particular farm, I spent $277 on animal health per cow, or 60% per kilogram of milk solids. So you can get some of this standard benchmarking data. Now, if you want to compare your farm to similar farms, so use benchmarking data. You can get that benchmarking data either from Dairy NZ, go to their website and search Econ Tracker, and you can find similar farms in your region, or maybe you're associated with Dairy Base, so you can use their data as benchmarking data, or perhaps you're part of a discussion group. Now, once you've got your farm expenses here, and you've gone and compared yourself year on year, or you've compared yourself to other farms, you can also move down here to our adjustments. Now, these adjustments we often see more used by farm consultants for benchmarking purposes. This is used if you want to compare your farm against other farms in, say, your discussion group. These adjustments are made to give you, a true economic farm surplus. But if you're using this report just to compare yourself year on year, then you can leave these blank. But if you're comparing yourself to other farms, then you might want to consider putting in an adjustment. So what are these adjustments? Well, we have a fertiliser adjustment, and this is when you make an adjustment for any capital applications of fertiliser that you want to separate out. We've also got an R&M adjustment, and this is for any capital development that you want to separate out from your R&M. We also have an adjustment for management wages, and this is, say, if you're an owner-operator system and you're paying drawings rather than a wage, you can add a management wage adjustment to standardise what you would have paid someone else to do the work that you did. And finally, we have an adjustment for depreciation. And that brings us down to our really important metric, our economic farm surplus metric. So this is what happens on this farm, excluding the ownership structure of the business. It doesn't matter if you lease or you own a farm. You can use this figure to compare your performance against other farms. At this point, it doesn't matter if you've got a massive mortgage or no mortgage at all. And this is the figure that banks often use to monitor the performance of your farm. Remember, your economic farm surplus is also sometimes known as your EBITDA, your earnings before interest, tax and rent. Next, we go down to our interest and rent. And your interest and rent can vary considerably between farms depending on whether you've got a massive mortgage or a small mortgage. And once you take your interest and rent into consideration, you're left with your operating surplus, which is basically your taxable profit. And from your operating surplus, you can take off your non-operating expenses, and you're left with your overall financial position. So this report is a great report. It's got so many valuable metrics that you can use to compare the performance of your farm either against yourself year on year, or don't forget you can also use benchmarking data. Now we're nearly at the end. I'm wanting to take you through to have a look at the profit and loss report within Farm Focus. I'm just going to take us back now though to our dairy demo data. And now I'm going to go into our profit and loss report. Now, our profit and loss report is mainly used to calculate your taxable profit or loss of your business. Your P&L is an accrual-based report. This means it includes all your income and expenses that occurred in the period, whether a payment has been made or received. Your P&L is basically done for taxation purposes, and any taxable profit will transfer from your P&L to your balance sheet, either as a positive, an increase in equity, or a negative, a decrease in equity. So to set up your P&L, I'm going to just show you actuals for last financial year, and I'm going to apply. And you can come down here and you can see the net profit for this particular farm. Now, you've got the ability to make some adjustments here, but because we don't automatically include adjustments, and especially a depreciation adjustment, and because the profit and loss in Farm Focus doesn't have an associated balance sheet, this P&L should be used as a guide only. And to be honest, this is what I pay my accountant to do, to establish what my profit or loss is going to be for my farming business. So the final thing I want to show you is our break-even milk price. Now that is actually in your dashboard. So go into your dashboard, scroll down to the bottom here, and you can see here is your break-even milk price. Now this figure here indicates how much income you need to generate from your milk production to cover the costs associated with running your business. Your break-even milk price point can calculate really what you need to earn if you're going to make zero profit. So on this farm, you'd need to make a zero profit. You'd need to earn $6.58 for each kilogram of milk solids. Now, the data used to calculate your break-even milk price in Farm Focus is based on your revised working plan. So it's your actuals to date plus any planned items going forward. So you need to ensure your budget is up to date to ensure you get an accurate break-even milk price. Now you can click in here to find out how we calculate your break-even milk price in Farm Focus. But be aware that this this calculation does include bank and fund transfers. So in general businesses that have a low break-even milk price means they tend to have more money to invest and grow. Clearly, the aim shouldn't be just to break even. We want to have some surplus cash available. Now, remember though, your break-even milk price is just one metric and it shouldn't be used in isolation. You need to use this metric along with a lot of other metrics to see how your farm is performing. And a word of caution about break-even milk prices, be aware of what each organisation is putting into their break-even milk price because it can vary. Well, that's about it, everybody. I have covered a lot of information, but I want to finish with a few reminders. The first one, as I said, I've covered so much information. It's really quite hard to take it all in. But if you want to refresh, don't forget, if you go into our Help Centre and search under any of these reports, there is a Help Centre report, a Help Centre resource on each of these reports that you can refer back to. And don't forget, you cannot break anything or any of our reports. You can only change the way the information is displayed. Now, you can manipulate your report to view what you are interested in at the time. And you do that by the way you set up the report with the modal, and then once you're in the report, by the way you filter it and view it. Now, the more you experiment with your reports, the better you will become at manipulating the reports, interpreting the reports, and finding the nuggets of gold relevant to your farming business. Now, be aware, I did show you this in the cash flow detail report. If you put a filter on your report, it will persist when you move into a new report. So don't forget to simply go and turn off that filter. Now, if when you go into your own databases, your reports don't look like the ones that we showed you here in this webinar, go back to those basics. Check, have you got your high-level code structure correct? Have you been consistently coding your invoices? And have you added that detailed data on quantities, descriptions, and notes? And also, have you added that physical farm data into Farm Focus? So what I want to do now is reflect back on our aim. So we have covered a lot of reports this afternoon. First of all, if you remember, we talked about the cash flow detail report. This report drilled into the detail and the assumptions behind the cash flow grid. Then we moved on to the variance report. Now, the variance report, if you remember, it allowed you to compare two sets of data. It answered questions like, how well did I do this year compared to last year? Then we moved to the year-to-date variance report. And this report we can use if we're managing our budget closely. It shows how well you've done this year this month compared to what you thought you were going to do, and also at a year-to-date level. Then we move to our trends report. And our trends report showed us that macro-level trends for 5 consecutive years of data. Then we moved to our livestock reconciliation report, which showed our stock movements for the financial year. Then we moved to our economic farm surplus report. And remember, that report showed all our physical and financial performance data of our farm based on KPI reporting groups. And it contained heaps of valuable metrics and performance data on our farm. And if you haven't gone and looked at your EFS for your own farming businesses, I would highly encourage you to do so after this webinar. Spend some time analysing it, understanding it with your own farm data. The next report we went into was our profit and loss report. And this report showed our profit or loss for the financial year. And the final report we looked at was, or not really report, but we looked at our break-even milk price. And remember, this indicates what you need to earn on a kilogram of milk solid basis to make a zero profit. Oh, well, that's about it. What I want you to, though, to be aware of is we are offering a new service in Farm Focus. So if what I've covered today seemed all too much and you want to have a further helping hand or a deeper dive into your own databases, we've got you covered. For $3.99 plus GIST, you can get a 2-hour one-to-one session with an expert from Farm Focus that will give you a full health check of your database, which will include updating all your farm codes, your stock codes, checking that you've entered your physical data into Farm Focus correctly, and to make sure your stock rec is tidy. So if you're interested in this, please get your phone out now, open up your camera, and if you put your camera over this QR code, it will take you straight into where you can register for this full health check of your own databases. Likewise, if you go onto